Good evening, everyone. Welcome to the Brian Crombie Radio Hour on Saga 960. I've had the pleasure of interviewing Daniel Foch before of the Canadian Real Estate Investor Podcast. We've had more go on in regards to announcements on housing and affordable housing in the last couple of weeks than I can ever remember. The federal government's made almost an announcement a day. The provincial government's come out with a new bill. And so I thought it'd be great to check in with Daniel, see what he thinks about what's going on. How are you, sir?
I'm good. Happy to be here. Happy to see all of these policy advancements that are being made. Hopefully we do see some progress on actually executing on a lot of these plans.
So what do you think of the announcements? Let's start with the federal government. It made an announcement really almost once a day last week. And then on Friday, a fairly significant announcement of all of the different things that they're planning on doing. And really, you and I talked about this before. It was almost an appeal for intergenerational equity. It was really quite a impassioned rationale for why we needed to invest so much money in housing and change the projection of where we are in supply. What did you think of that all that week?
I think it's a clear reflection that they understand the problem that I would say they're dealing with heading into the next election, which is that they're losing the faith of young people, and the young people feel really left out of the Canadian economy, especially, and housing would be the most meaningful way that takes place for them. And so they need to make an effort to balance the scales here, especially if they want to win the next election, but also just for the health of the Canadian economy. And so, combining not only the housing plan that came out on Friday, but also the new capital gains, which is being branded as, it's called tax fairness for all generations. And it's going to increase capital gains on anything over $250,000, as well as any corporate capital gains starting June 25th. So again, I think it's pretty clear here that they're making an effort to make things better for young people, and probably with the objective of making the party more favorable in 2025.
So you think this is just a vote getter? It's not necessarily because they think it's the right thing to do.
I don't think it's purely that, to be honest with you. I think it's a little bit of both. But I think it would stand to reason that they probably do think that it will help them. I think that they're relatively well established with the older generations. I think it probably surprised them to see the younger generations. The polling numbers are pretty clear, and younger generations are feeling like we need change. And so that probably surprised them, because I think that they resonated really well with the young generations in the last couple of elections.
Well, I think the statistics I saw showed that if the young generation or younger people hadn't voted in greater numbers in the initial election that brought Justin Trudeau to power, Stephen Harper would have won that election. And it was really the fact that young people came out to vote and that newcomers came out to vote that was the reason, and the electorate changed. Turnout went up and the electorate really changed, was the reason why Trudeau got elected. And most people credited that to one policy, which was the decriminalization of marijuana.
Yeah, for sure. And so to see that change so quickly, right, from being supported by the younger generation and it being able to decide the election as you described, to now not being able to rely on that generation to continue your government, seems to me like, it's a significant change for them, I would imagine. And so I think that, it likely leads them to what is the right thing to do here, which is, okay, we've obviously upset a certain group of the population. How do we make sure that they're not nearly as upset? And that's really what this housing plan, I think, is designed to do. And I think the capital gains is designed to do that as well. It's kind of trying to balance the outcomes between this huge wealth gap that's been established primarily by wealth in real estate, right? You have baby boomers who have owned homes a lot longer, and during that period of time, they've inflated a lot in value. And so they all have a lot more money than younger people who now are having a hard time affording to rent, affording to own homes. Many people feel like they'll never own a home. I think something like 66% of non-owners believe that they'll never own a home again. We're seeing an increase in the roommates is like the fastest growing household type, right? And so I think something needs to change, and they're acknowledging that now, which is nice. It's nice to see them actually addressing this and making an effort to do something about it.
Sorry, that statistic that you mentioned is really kind of interesting. So 66%, you say, of people that currently don't own a home don't think they'll ever own a home.
I think it's 76%. I'll see if I can pull up the stat. But yeah, I think it was 76% of non-owners believe that they'll never own a home.
Which is, shocking, because I think our home ownership rate is about that percentage.
Yeah, I think home ownership rate is 66% in Canada. And the non-ownership piece is, I'm just looking it up now, but buying a home feels out of reach for 76% of non-owners, according to a poll.
That's, well,
CIBC report.
If that includes the portion that are in that 25 to 35% that don't own today, and that are older, I guess that's understandable. But if it's young people, that's really concerning, because that does say that they've lost that hold on the Canadian dream.
Yeah, for sure. I think that, like, for the past many generations, that people were able to, and you hear the government using this language now. The rules used to be, you could go to work, you could get a house, right? And now it's not like that anymore. I think the average household income you would need to get a house in the city of Toronto is like $250,000. In Vancouver, it's $300,000, right? It would take somebody on the average income in either of those cities like 30 years to save up for a down payment to buy a house in those cities. Like, National Bank puts out a lot of this stuff, and so again, they're making an effort to balance those outcomes. I think that the housing plan does have some good stuff in it. I don't think that a lot of Canadians have faith in their ability to execute, but the way, and sort of to frame this around the entire conversation that we just had, to me, I look at this as almost like a do or die for them. Like, it is the right thing to do, sort of what you had asked. If they execute it by the time, or if they execute on a lot of these items by the time the election is up, it probably would increase their chances of getting another term significantly. If they don't, I think that people are going to, it's this sort of the last straw, right?
August of last year, the Prime Minister was quoted of saying, housing isn't a prime responsibility of the federal government. And then this last week, it's been nonstop housing. What happened in the intervening, not even a year?
I think that shift in the polls is really what happened, to be honest with you. I think that, like, it was almost months later where they started realizing, wow, like, we really have to do something about this. Otherwise we're done. And I think that last piece, where it almost came out as like, it seemed like a deferral of accountability, right? That the whole mess wasn't really their fault. And you're still seeing a lot of language, like even in the plan, it talks about how this was 20 years in the making, and it was. I won't dispute that, but it was also, eight of the last 20 years belonged to a certain administration. And so I think people did want to see a lot more accountability, and that line really felt like the pinnacle of the lack thereof, right? And polls started to reflect that, and then all of a sudden it became, wow, this is our primary responsibility.
This is an excellent conversation, and I think it's very timely. I appreciate you joining us. If people want to check out your podcast, how do they do that?
It's typically towards the top of the investment category on both Spotify and Apple podcasts. So you just search the Canadian Real Estate Investor podcast, or anything really kind of related to Canadian real estate investing, it'll usually show up. It's the images of myself and my co-host Nick Hill, and it just says the Canadian Real Estate Investor in white and red font.
Well, we appreciate you joining us and sharing your knowledge with the listeners to Saga 960. We're going to take a break for some messages and be back with Danielle in just 2 minutes. Stay with us, everybody.
Sounds good.
Welcome back, everyone, to the Brian Crombie Radio Hour on Saga 960. The topic tonight is housing and all the government action in the last little while in regards to the housing file. Our guest is Daniel Foch from the Canadian Real Estate Investor podcast. We've had the privilege of interviewing him before, and he's incredibly knowledgeable on what's going on in the Canadian real estate sector. And so I appreciate you coming back on. I saw you interviewed the Minister of Housing recently. What was his response to your questions, and what did you think of the interview?
I was pretty impressed. I mean, I think he is definitely much more comfortable on this file than the last file he was on. It seems like he's really a good fit for it. I think that he's taking it seriously, and I think that he's well equipped to do things. I honestly wish he was probably on this file a lot longer, and I think they would have made a lot more progress. The plans that they've laid out are great. A lot of them are difficult to execute. Some of them are easy to execute. I think that it remains to be seen how much impact all of these things are going to have, and really the question of that comes down to the magnitude of their execution. So the one thing I will say is, they've outlined this sort of as a plan, and they are trying to get feedback on it, and they really want to hear from stakeholders, people who are impacted by housing unaffordability, people in the real estate and construction industry, and that's sort of the next step towards pushing a lot of these ideas forward.
So let's talk about some of them if we could. They've got, I think, a $2 billion infrastructure fund that they've expanded to $2.4 billion. And, it almost seems to me the way that they've described it is it's whether you call it a bribery or an incentive scheme, but they're not going to give it to cities unless cities do what they want. And it's almost as if they're trying to really run cities. And I wonder, is it democratic and is it what people really want? But what they're demanding is this a fourplex that you have an as of right ability to convert a single family home into 4 different units. And then in addition, that they need cities to agree to dramatically, increase density and height within 800 meters of a transit station. And then finally, to shorten approval time periods. What do you think of that whole, $2.4 billion that they're sort of dangling out in front of cities, but saying, but you got to do what we want if you want the money?
From my perspective, I mean, I don't know if I would call it undemocratic, but I think it's just them playing in a different sandbox, right? That they've now taken a much more meaningful involvement in the jurisdiction that was traditionally municipal. With that being said, most municipalities need federal funding for infrastructure, and so in this case, a lot of them are happy to oblige the demands of the federal government. I think it makes more sense. Like, municipalities, honestly, have really not been held to account just as much as many other levels of government, and so I think everybody has to make some compromises here, and I think everybody has to share in the accountability for the problem that's been created, and this sort of is it's a reasonable way to mechanize that. I think the nature of it kind of being like a bribe and being forward looking is the challenge on the execution side, and I know that they're often criticized by the opposing ministers for this being sort of like a pay for promises kind of thing, which I had mentioned to Minister Fraser. And he stated how it's paid out in 25% increments, and so they do need to see results for it to take place. But it does. I mean, so far it seemed to be like a lot of these municipalities are getting the upfront portion of the funding, the 25%, before they've actually done anything from a policy perspective. They're kind of making a promise to do it, and there's already some friction forming on municipalities that aren't doing it, right, as we're seeing taking place in Alberta. And so again, this is where those big challenges. Now you have 3 levels of government jockeying for control over something. It's really an illustration of how the friction has become so challenging. And the fascinating part is that this is really a policy that was sort of taken out of the page of the book of Pierre Poilievre, who was kind of talking about pushing municipalities, and it's almost backfiring a little bit for them in having that tough on municipality stance so far. I think there actually, that's not fair to say. There's examples of it backfiring. There's examples of it going exceptionally well, like we're seeing.
Where do you think it's backfiring?
Well, I think in Alberta they're having some issues with the municipalities now not wanting to conform to the policies that have been discussed by the province and the Fed. And then in other areas, again, the policies are just far slower to get there. I think London, Ontario, it sounds like in Halifax and in Nova Scotia, it's doing well. But I think some of the other areas, City of Toronto is another good example. I think they got 114 million, something like that. And I don't think they've actually executed on the policy that they've promised so far. And I imagine there was a commitment, like to my understanding now, that the commitment was 114 million. They get 25% of it, and the remainder they'll get as they start to actually deliver on this promise. So I guess we'll see how it shapes out. But from what I'm seeing, municipalities are still very slow to deliver to get the remainder.
Yeah, I guess that's where I differ from you, where you said that the municipalities were happy to get the money and make the agreement. I don't think they are. And I think that municipalities really have been the laggard in the level of government willing to address the housing issue, because they're the ones that have caused the vast majority, I think, of the housing problem, with the red tape and regulation and slow to approval, and over zealous zoning rules that have tried to really influence dramatically, if not control, how housing development took place. And effectively what the federal government is saying, and I think we'll come back to the provincial government in a couple of minutes and talk about that, but effectively what the federal government is saying is, municipalities, you've been the problem here, and we're going to force you to change, and we're not going to give you the money that you don't so desperately need unless you change. And I think they're going to be carried kicking and screaming to the altar of trying to figure out how to dramatically reduce the red tape, regulation, and zoning process, to speed up the approval process, and to ensure that they've got that height around transit zones when they've got electorates and neighbors that vote them in every 4 years that are so opposed.
Yeah, I think it presents a unique opportunity for municipalities, right? Like, there's this principle in economics that firms exist to make profit. I think that governments, especially municipal governments, exist to do the same thing, but the only way that they can do that is by expanding their tax base. And I think that municipalities, when faced with this massive decline in new construction that we're seeing in today's market, because nobody's lining up to buy new homes, municipalities that start to get creative with incentivizing development are going to see the long-term benefits of it. And you're starting to see some municipalities making accommodations for like purpose-built rental, deferral development charges, tax incremental grants, etc. As we start to see more and more of that ramp up, there will be, I think, meaningful differences between municipalities that further incentivize development and commercial activity when compared against municipalities that don't in the fullness of time.
How can a municipality incentivize development? The taxes that they level on new development is substantial, and the time period for approval is, most people think, 5 to 7 years. So how do you actually incentivize development?
Yeah, so I think like if you look at maybe Vaughan Metropolitan Center as an example compared to like downtown Toronto, or Mississauga around Square One, you're getting like architecture that's more friendly towards the developers. Like you can see the difference in the towers. Downtown Toronto, you sort of have this extra committee that seems to redesign everything, including like the most notable architect in the world, who was Toronto made, Frank Gehry. They redesigned his sort of building, and I think that kind of serves as an interesting case study, where it started off as this beautiful, grand, three tower, iconic proposal, and it's kind of come down to another blue glass box. I think this one will be a shinier blue glass box, but and then you look at Vaughan Metropolitan Center or Mississauga, where the architecture alone is very different. Approvals are quicker, development charges are lower. Toronto just increased the development charges by 54% again after doing it by 110% a couple of years ago. So I think that there's a lot of ways that municipalities can do that. Development charges is probably the biggest one, like you were saying, the taxes that they're levying. If you start to see a deferral or tax incremental grant on development charges, or even a removal of development charges on a certain type, or reduction in development charges, rents and per square foot values aren't that different around the 905, and even from the 416, right? So if you're a condo developer and you can build a condo building and your taxes per unit are far lower in Vaughan, as an example, than they would be in downtown Toronto, and you can sell it for a comparable value, where are you more likely to go? You're going to go where the margins are high. And municipalities are going to start realizing this. They already have, and they're going to start competing on that basis, from my perspective.
So based on market value, my understanding is that the 905 is actually taxed for property taxes higher than Toronto.
From a property tax perspective, yeah. So this is the interesting part, right? It's because Toronto puts all of that tax burden on new development. So Toronto has some of the highest development charges, as an example. And so you're almost subsidizing a lot of these legacy owners who get to own these houses with a very little annual tax burden. And you're taking that cost and passing it off to the brand new supply pipeline. So buyers end up getting hit with it because you have in Toronto, you have a municipal land transfer tax, so a lot of revenue comes from that, and then you have development charges that are pretty much higher than anywhere else, and so that enables taxes to be low because a lot of the revenue generating activity comes from everything else. Now, that being said, development charges do go into their own municipal capital pool, so there is a capital pool that's only for capital projects, so infrastructure to help for new development. So in the city of Toronto, as an example, and this is where you hear that kind of growth pays for growth mentality. So all of that money from development charges is supposed to go towards things that allow for more development. And the ironic part is, like, I think that that portion of the revenue pool is sitting untouched, and there's like billions of dollars in that account.
Yeah, I think the Toronto tax situation is even worse than what you described because they're also very reliant on commercial property taxes, and that's been one of the strategies that the administrations in Toronto have used is develop this big downtown core and other areas, but primarily the downtown core, and tax it like crazy and keep the property taxes on residential lower. I understand that there's quite a big concern right now in Toronto with vacancies, particularly on Mondays and Fridays, being so high that they're worried that you're not going to have that kind of growth in commercial tax base in the future. And if you don't have the growth in the commercial tax base, and you've got these development fees that you've just described as being outrageously high, just absolute basis, but also relative to other areas where developers might develop, you got a real hole in the property tax revenue base and the revenue tax base of the city in the future. And so I think that Richard Florida published a big article that you may have seen recently where he said downtowns probably can't do a lot more to make office work more attractive. They're going to have to find other ways to get people to come back downtown again. We got a real problem with the lack of the commercial tax base downtown. And then you mentioned the Vaughan Metro Center. I don't think it would have been created or could exist without the expansion of the subway that's coming.
Sure.
And then you've got really very lenient and quick approvals in around that Vaughan Metro Center, and the Square One in Mississauga. Frankly, it was former Mayor Hazel McCallion who I think had the brilliance of let's have an unlimited height, which gave the incentive to developers to do what the market demands rather than what city tells them. And I think it's interesting in this free market capitalistic society, we have city governments way too often telling developers exactly what they can do. And so Hazel actually just opened it up and said, you can build whatever you want to build. If you want to build 80 stories, you can build 80 stories. And no one did. But what was interesting is developers actually did market studies to try to figure out, and economic studies, what did the market demand and what was economically feasible. And they did hire Starchitects to come in and design beautiful buildings, which I think is really interesting because it proves that when you unleash the development industry to do what the market says is right, rather than what government says is right, you get some interesting results.
100%. Yeah, I couldn't agree more. I think that we need to enable the private sector here to do. I mean, if the public sector was going to solve the problem, they already would have, right? They've had a long time to do it. And so I think we need to be removing barriers, which seems to be what a lot of the language is about in this housing plan and in the opposing parties' views and sort of what they're campaigning on for the next election.
We're going to take a break for some messages and come back in just 2 minutes and talk a little bit about the provincial government and what they're doing of late. Stay with us, everyone. Back in 2 minutes. Welcome back, everyone, to the Brian Crombie Radio Hour on Saga 960. My guest tonight is Daniel Foch, who is the host of the Real Estate Investment Podcast. He's a real expert and very knowledgeable on what's going on in the real estate industry and with government policy in regards to the real estate industry. We've just been speaking about the federal government and their significant announcements over the course of the last 10 days or so. Daniel, let's switch to the provincial government. They came out with this big bill that really is trying to get rid of red tape and regulation. But, it seems like we don't have as coherent a plan provincially, and we've had a bunch of backtracking. We had this big survey, panel that was, I think, called the Housing Affordability Task Force 2 years ago.
Mhm.
They came out
Yeah.
with 57 recommendations, I'm told, and only about half a dozen of them have been implemented. And then, the whole Greenbelt fiasco wasn't even part of anything that real estate, that housing task force discussed. And then also all the use of ministerial zoning orders, MZOs as they're called, to sort of overrule all the stuff that provincial and municipal governments had put in place previously. What do you think of what the provincial government is currently doing on that housing file?
I think that Bill 23 was pretty meaningful, and I think that that's going to help. But we haven't seen a huge uptake, honestly. So Bill 23, just for context, the most meaningful thing that happened as a result of that was that people can now put 3 units, so 2 units in one building, and then a detached ADU or accessory dwelling unit on any residential lot in the province of Ontario. It's that's provincial, so municipalities still have to kind of adapt their plan to make sure that that's executable at a municipal level. But with that being said, because it's done at a provincial level, if you propose that and they rejected your proposal, you could take them to the OMB, the Ontario Municipal Board, I guess LPAT now, and they would lose. And so they'll refuse to go to the OMB, or they'll do whatever they can to avoid it. So the objective here is to get everything up to 3 units. The interesting part is now the discussion is coming into play about 4 units, and it seems to be sort of the major talking point between the two opposing viewpoints at a provincial level, especially following the lead of British Columbia, who's gone to 4 units and is thinking about going even higher, and the city of Toronto, who's gone to 4 units, and in neighborhood areas in the city of Toronto. I think beyond that, all of the other housing affordability task force things, some of them have helped. Some of them, like I think the biggest thing right now, and we were just talking about the private sector, is the economics of deals are just so bad. And the only lever really left from my perspective to push on is a removal of fees to increase the margins for developers. Development charges being one of the biggest ones. I think municipalities have already sort of gotten rid of the provincial sales tax, the HST self-assessment on purpose-built rentals. And buyers get that back anyway if it's an end user purchaser or if they're renting it out. So I don't know what more can be done other than adding more density, but we're not seeing a ton of these 3-unit projects being built yet because the economics are so bad. We're not seeing a ton of high-rise being built because nobody's lining up to buy cash flow negative condos anymore. And so a lot of that demand is trying to get pushed into the purpose-built rental sphere, but it's just like very few projects work as purpose-built rentals. So something needs to be done to incentivize purpose-built rental construction, I think.
Why do you think so few projects work as purpose-built rentals?
Yeah, so it's a good question. So if a developer builds a built for sale condo building, their equity requirement is like between 10 and 20%. Whereas if they build a purpose-built rental project, even with CMHC MLI select financing, their equity, which allows developers to get to up to 95% loan to value mortgages, their equity requirement would be like 20 to 30%. So you're seeing like a doubling of how much cash a developer would need to put into a project to make it a purpose-built rental. And cash is not easy to come by right now in this economy. I think we've seen a huge contraction in credit and in equity, and so that's probably one of the biggest reasons.
If you're getting 95% financing from CMHC, why do you have to have 30% of equity?
Because you still have to develop the land, you still have to buy the land to begin with. Like, so the 95 LT, sorry, I should have said 95 loan to cost, and then it would be loan to value on the way out. So once you've built it, if it's built to the criteria that they're asking you to build it to, they would give you term debt, like a long-term mortgage at up to 95% loan to value. And 95% loan to value would have to check a lot of boxes. It would have to be basically the peak of environmental sustainability and affordability or accessibility. So yeah, it's that piece I think is just kind of just applies to the construction. So they'll give you 95% of construction costs. So you still have to deal with the land, right? So you still have to buy the land, entitle the land, pay for all of your architecturals, get it to site plan approval. and that's still an expensive process. If you were developing it as a condo building, during that process, you would pre-sell units and you would put insurance on those pre-sale deposits, and using something called the Westmount Guarantee. And Westmount Guarantee's website basically shows how they allow developers to access and put to work this deposit cash by insuring it. So that becomes part of your capital stack as a developer. So that's equity that you can basically use towards a project. So half of the equity that you would put in as a developer on a condo sale would be yours, and half of it would actually be the buyers of your condo project. And so that's why a lot of developers see these condo investors as partners in the project. I hope that explains it well enough.
Yeah, no, I think that's helpful. The challenge with the condos is you got to get what, 75, 85% of them sold up front before you're ever going to get that construction financing. And so therefore you've got to get a whole bunch of people that are thinking 2 to 3 years down the line, that I'm willing to either move or I think what's happened is a lot of investors have been buying those condo units on a pre-construction basis, putting in those deposits that you've just talked about. And to get people to commit to an investment 2 to 3 years before you're going to actually be able to see it is challenging. And in the past, it was a little bit easier, if not, frankly, a ton easier, because people saw this huge escalation in inflation in condo prices. And so, hey, I'm going to be able to invest today, and the profit I'm going to make in the next couple of years is equal to, if not greater than, the deposits that I'm putting down. And so, you had a huge amount of interest in pre-construction condos. That's where I think the market has dried up, is it not? It's that you just don't have those people that are willing to put money down now for a condo that's going to be delivered in a couple of years. And so therefore these developers aren't able to get that 75 to 85%, pre-sale. And so that's why the condo business has dried up, is it not?
Yeah, that's pretty much the major factor, is you don't have investors lining up to buy these units anymore. And so you can't really launch a project. And developers, they could reduce prices, but it's still not really going to catch a bid, and they can't really afford to build for much cheaper. And that's the other piece, is that on a purpose-built rental basis, if you're building a concrete project, your total creation costs are like $700 to $800 a square foot. So they don't really have that much margin to play with. Whereas if you're building a ground-based project, your total creation costs are $500 to $600 a square foot, and rents per square foot rents in the 905 versus 416 are pretty comparable. Like, maybe $4.20 a square foot in core, and $4.10 or $4 in the 905. And so why would you build concrete right now, especially as a purpose-built rental? Like, it won't even pencil, because to get that CMHC financing that I mentioned, you would have to have a debt service coverage ratio of over 1.2%, or sorry, 1.2 times. And a concrete project is just not going to hit that because the costs are too high relative to the rents.
But the federal government has taken off, the GST. The provincial government's taken off the PST or the HST in total. The CMHC has dramatically increased the amount of debt that they've got available. As you say, they've increased the percentage of the cost that they're willing to finance. And then, the rate that CMHC is offering is pretty damn attractively low. So with all those incentives, it still doesn't work.
A lot of projects aren't working still. Yeah, I mean, the land cost, you have to imagine, like, a lot of these builders bought with land costs, assuming that their project was going to sell to those investors in 2021, 2022, who were paying 20% over market. So land values have come down 30%. So if somebody bought land today to build a purpose-built rental, yeah, they probably would be fine. If they bought land in 2022 to build a purpose-built rental, they're probably not doing nearly as well. And so, or the project probably just doesn't work as a purpose-built rental. And this is where we're seeing a lot of receiverships in the development space, like, big projects. Most sales that are taking place today are distress sales in the development market. And so once a lot of that comes out in the wash, and I think the government is also, you mentioned they issued a lot more CMHC debt, so they've increased the CMB issuance from 40 billion to 60 billion, so 20 billion more in funding per year. But they've also committed, this is one of the things people miss a lot, they've also committed to buying 50% of those CMBs. So the government is actually going to be buying Canada mortgage bonds, which is kind of like a yield curve control. They're kind of going to be able to artificially suppress that rate and keep that rate low. So as rates come down, that CMHC rate should help to improve the viability of a lot of projects. I think you're also seeing construction costs coming down a little bit because the employment market is weakening. And so I think in the next 2 years, we'll probably see a lot of progress in the housing space. And hopefully that'll drive the economic recovery we're going to desperately need, I think, based on the economic setup that we're in. It's just, still got to get through a year. Like, it's probably got to get worse before it gets better, I think, until we get to that.
So a lot of what the provincial government in Ontario has been doing has been on trying to incentivize, if not force, reductions in red tape and regulation, and get approvals done more quickly. Do you think that's going to achieve anything?
It's such a good question. I think it does to a point, and I think we're already at that point. So we have the most approved units that we've ever had in history. So like, we have this pipeline of approvals sitting. So why aren't we seeing record housing starts? Again, the projects just aren't viable. So you've gotten all of these units now that are approved, and in order for them to get built, they have to move from so you just moved the bottleneck to the construction pipeline. So we've gone from an approval bottleneck to a construction bottleneck. Now you have too many projects that are looking for work, looking for people to work. And that was what drove the construction costs up, because there was so many units and our construction industry wasn't growing. Of all of temporary foreign workers in Canada, only 3% of them are in the construction space, whereas 8% of the Canadian population is in the construction space. And I think of the 500,000 people who came to Canada through the permanent residence stream, only like 355, I think it was, came in through the skilled trade system. They have been making an effort to ramp this up. But the point here is that we now have a construction bottleneck. And this is where you're seeing CBRE just came out with a report. There was a headline in Bloomberg that I just posted today that mentions how that we need to see skilled trades ramp up. We need to see the construction labor pool ramp up if we're going to be able to actually build all of these homes. We've got a lot of approvals. And so I like the red tape piece. I think it's great to see that starting. And I think a lot of people focus on that. But now all of a sudden we need to actually build these approved units.
So what do you think? We've had the federal government very active. We had the provincial government very active, but as you've described, some of the problems are just in the marketplace, whether it be high interest rates or lack of pre-construction condo investment buyers, or just lack of people to actually pour concrete and hammer in nails. What's your prospect?
I think, fortunately or unfortunately, this is kind of the point where you reach a breaking point, and things have to get bad. Like, I think that the economy is just going to suffer as a result of the mismatch of a lot of these things. So, had we seen this big flood of construction labor during the period of time when we were building a ton, they might have been able to ride that wave, but it comes a little bit too late where, projects are already unviable. So when you get this big inflation happening, inflation in construction costs, inflation in number of units built, inflation in the value of units, value of land, all of these different things, it pushes everything up, and then it has to break in order for all of those things to come back down. So what we need is, we need construction costs to come down. We need capital costs to come down, right? We need credit costs to come down if we want buyers to be interested in purchasing again. We need household debt expenditure to come down if we want people to be able to spend more money on servicing mortgages or contributing to the economy. Rents should be coming down. And so to me, that screams like you need a period of deflation to take place. And this is why recessions are probably one of the few ways that get inflation back down into that neutral range. It has a 100% success rate of getting inflation into the neutral range that central banks are looking for. So to me, like my thought is that Canada is going to see a recession. I think we're already in a recession. It's just on a per capita basis, not on a nominal basis on GDP, because our population is growing so quickly that GDP can still grow. But if you look at the population growth and the GDP growth, our GDP per capita is falling and has been falling for like six consecutive quarters, if not more. Our GDP per capita now is on par with 2017. So we basically have seen no wealth creation or economic growth on a per capita basis since 2016. So to me, this screams like Canada's not in a good economic position. As that materializes and everybody starts to feel it, things kind of come down, and then we start rebuilding. But you kind of have to let everything burn down so they can, metaphorically rise from the ashes, let's say.
Our unemployment rate is still very reasonable. How can we be in recession if our unemployment rate is still so low?
Yeah, it's a good question. I would say that because GDP, I would use the GDP metric to sort of establish that we're in recession. And again, technically, we're really not, right? Like we saw a couple of periods of GDP or negative GDP growth, and then now we're seeing it growing again because our population is growing so much. The other piece is that a lot of that employment growth comes from public sector job creation, and so I think that the government spending is really propping up the economy as well right now, and not that is necessarily a bad thing, but I think that there are longer term consequences to that. So
no, I agree with you
yeah.
on that regard. I think the other thing is that there's a lot of people, in and then post the pandemic, if we can say that we're post the pandemic, that have chosen to leave the labor market pool.
Right.
And whether it's that they're just staying at home or they're joined the gig economy and are driving Ubers or launching businesses or becoming social media influencers or launching podcasts, whatever it is, they're not counted in the people looking for job, because the unemployment index that is recorded and reported is of those that are actively looking for jobs, that have had jobs recently, and not people that may have had a job 5 years ago or pre-pandemic. So I think that is the case. So bottom line, sounds like you're pretty pessimistic about the Canadian economy and the housing in the next little while. You're saying that people are trying to do a lot of things. They've done this Bill 23, which says that you has a right to build a threeplex. Not much is happening. We've got, as you said, the more approvals than we've ever had before, but still people aren't building. Interest rates are still high. Even though CMHC and the federal government's done so much, and the provincial government to induce rental development, doesn't seem to be happening. So you're pretty negative.
Yeah, I mean, I don't think there's a lot to be celebrating for Canada's economy right now, honestly. And I hate to feel this way. I really do. I don't revel in it by any means, but I just try and be realistic. And I don't think that we really have much going for us right now. We have an economy that's massively overexposed to housing, and housing isn't doing well. You mentioned, a lot of people leaving the labor force economy, or the labor participation rate. I also think doesn't account the labor numbers also don't account for the unemployment numbers, don't account for people who have multiple jobs, right? So that would show up as job creation, and the amount of Canadians that need to have multiple jobs just to get by right now. It's a phenomenon we're seeing in the U.S. as well. I mean, Canadians are really struggling, and I think that the central bank is going to be forced to cut before the Fed, and usually you start to see the economy suffering after a cut. A lot of people think it's before, but it's actually indexes start to actually decline after the cut. If the U.S. there's a lot coming out now. Wall Street's sort of pricing in cuts in the U.S. Next year now. So the final straw for us is that if we cut in June, let's say, which seems like that's what the market thinks is going to take place, and the U.S. cuts in January of next year after the election, maybe they don't want to politicize it. That's a very rough period for the Canadian dollar as well, and that could cause some knock-on effects for Canadians with buying power outside of the Canadian economy. It could potentially stimulate foreign investment because our economy will be discounted against the U.S. dollar. But the biggest problem is that it's going to have potential imported inflation, which is where we buy all of our goods in the USD, and now all of those goods just became relatively more expensive. And so we really are. There was I think it was yesterday or 2 days ago, there was a great conversation with both Jerome Powell and Tiff Macklem. They were talking about a lot of these factors, and I really think that the central banks have a lot of work cut out for them, and the government spending, the fiscal policy is not helping, because we're sort of in an era of what's called fiscal dominance, where no matter what they do to monetary policy, they can't out out deflate or out they can't out impact what fiscal policy is doing on the spending side, which is all of those things that we just mentioned.
So if you've got this, incredible deficits and debt that's higher than we've ever had before, and that's to a certain extent, keeping inflation higher than it otherwise would be. And as you've described, the civil service has increased, government's playing a far larger role in the economy than it has in the past. Why do you think that they're spending that money? Do they have to?
Yeah, I don't know. It's a great question. I just don't think they know any better than to try and throw money at problems, to be honest with you. Like I think that's just the perspective that I have on what seems to be their strategy in the current environment.
Throw money at problems. Doesn't sound like a
I
great
think
strategy to me.
I would agree with you, and like I think that we're starting to see the longer term consequences of that. But it seems to be just the like I don't know. I think the only other alternative is like the exact opposite, and this like really comes back to the political business cycle, right? So the idea of a political business cycle is like your leftist politicians create inflation, and then you kind of, and Canada is a really good example of this. We keep bouncing back from sort of like left-ish to right-ish politics, where you have creators and then destroyers of inflation, right? So growth in the economy, and then you get this period of like austerity or contraction in the economy. And so, I like, to me, what seems to be taking place in the polls is that people are realizing that this isn't working and that we need a change. Whether or not we actually end up seeing one as a result of political shift will be an interesting. I guess it's going to be an interesting decade for Canada. I mean, we have so much potentially going for us. We really just need somebody who's going to maximize it, right?
What a fascinating conversation. Really appreciate you joining us tonight.
Yeah, thank you. My pleasure.
I'm going to take a break and come back with a couple of my own comments on the economy, because I agree with not everything, but a lot of what Daniel has to say. And I do think that, this is very similar to the 1990s. And we had some of the most profound political changes and fiscal changes take place in the 1990s, almost in history. But one big difference is that the United States, with what was, then the Clinton government, actually followed some of the same strategies, which made it a little bit easier. Anyway, I'll be back in 2 minutes. Dan, thanks so much. Daniel, I appreciate you joining us.
Yeah, my pleasure.